Hello class, good evening. So now, uh, for our next topic in the management advisory services, for the midterm, so let's discuss variable costing and absorption costing. So in business, this is very important, especially for the managers. It's because for them to know, for them to make a decision. So let's proceed. So first, let's define variable costing income statement. So it's premised on the philosophy that costs are either fixed or variable. Of the two, variable costs are deducted first because it directly relates from sales. The difference between sales and variable cost is called contribution margin. So, na-discuss na natin ito class. So, here in variable costing income statement, yung two kinds of cost daw is either fixed or variable. So, tapos, dun sa dalawang cost na yon, yung variable cost yung nauuna. Para, it's because directly related to sales. Ngayon, sales less variable cost, that is contribution margin. So, na-discuss na natin itong class dun sa CVP analysis natin. So, next is, let's say, here is the formula. So, sales less the variable cost is equals to contribution margin. So, contribution margin less the fixed cost, that will be your profit. So, ito yung ibig sabihin ng variable costing income statement class. Yung cost daw, so here in variable costing, so there is there is just only two cost, that is variable cost and fixed cost. So, absorption income statement. It is also known as full costing or traditional costing. It classifies costs and expenses based on functional nature of business operations such as cost of goods sold and operating expenses. Dito naman sa absorption income statement class, yung cost is either cost of goods sold or di kaya operating expenses. So, in an absorption income statement, the formula will be sales less cost of goods sold is equals to gross profit less operating expenses, that will be your operating income. So, ibig sabihin, absorption income statement, ito yung usual na ginagamit ng mga businesses. Yung variable costing is ginagamit lang yon for decision purposes. So, next, what are the difference between absorption and variable costing? So, here, so, una-unang difference sila, the difference between absorption and variable costing methods lies on how the fixed overhead is treated. So, take note class, sa variable at saka absorption, ito lang yung kanilang pinagkaiba. So, paano nila iti-treat yung fixed overhead? Under the absorption costing, fixed overhead is treated as product cost, while under variable costing, fixed overhead treated as period cost. So, sa absorption costing daw class, yung fixed overhead is tinitreat as a product cost. Ibig sabihin, kasali siya sa presyo ng product. Pagdating naman sa variable costing, yung fixed overhead is directly expense. I-expense mo kaagad siya. Naintindihan? So, ito yung matrix. Cost and expenses. So, cost and expenses, absorption costing, and variable costing. Ito yung mga cost and expenses class. Unang-una, direct materials. So, direct materials, pagdating sa absorption costing and variable costing, product cost siya. Kasali siya sa presyo ng product. Direct labor, ganun pa rin, product cost and At the same time, under variable costing, product cost pa rin siya. Variable overhead, product cost only. Ay, product cost also. At the same time, product cost here in the variable costing. Fixed overhead. So, dito na sila magkaiba class. Under sa absorption costing, ang fixed overhead is product cost. Pagdating sa variable costing, it is a period cost. Naintindihan? It is a period cost. Variable expenses and fixed expenses, since they are expenses, period cost. They are period costs. Product costs, also called inventoriable costs or deferrable costs, those that are associated with units produced or sold. So, ibig sabihin daw class, yung product cost is ito yung inventoriable. Ibig sabihin, let's say for example, gumawa ka ng products mo, and then, yung presyo niya is 100 pesos per unit. So, since fixed overhead is treated as a product cost under absorption costing, so yung fixed overhead mo is kasali as an inventory, part of your inventoriable cost. While period costs, as used within this discussion, are charged outright expense. I-expense mo kaagad siya. Yung period cost class is hindi siya kasali doon sa inventoriable cost, regardless whether the units are sold or unsold. So later on, madidistinguish nyo ano yung product at saka period cost. So notice that the overhead treatment, it is only where the two costing methods differ. Under the absorption costing method, ang fixed overhead is a product cost and therefore is deducted from sales based on the number of units sold. So that is ang formula, unit sold times unit fixed overhead. In variable costing, the fixed overhead is a period cost and is therefore the amount deducted from sales and is equal to the amount incurred or budgeted without regard the units produced and sold. So, kung mapapansin nyo class, ang treatment ng fixed overhead, pagdating sa absorption costing, product cost. So, ibig sabihin, sales less variable cost of goods sold equals contribution margin, right? Pero since under absorption costing siya, the formula will be sales less variable cost of goods sold less fixed overhead. That will be your contribution margin. While sa variable costing naman kasi, sales less variable cost of goods sold is equals to contribution margin. So, yun yung pinagkaiba nila. So, here is the sample. Efren Company gives you the following production data with respect to its March 2020 operations. So, production cost niya is 4 million. Production units, 10,000 units. Sales in units, 8,000. So, ito daw yung gastos niya, all in all. Ito naman yung na-produce niya, 10,000 units. Ito naman yung nabenta niya. Out of 10,000 na produce, 8,000 lang yung nabenta. So, here is the computation. Required, determine the cost of goods sold and value of ending inventory, assuming all production costs are considered as product cost and period cost. So, solution. Dito na. So, compute for the cost of goods sold. Cost of goods sold computed by 4 million times 8 divided by 10. So, saan kinuha itong 8 divided by 10? Hindi ba class, 4 million yung total ginasto. So, ito yung ginasto mo para i-produce itong 10,000 units. So, ibig sabihin, yung cost of goods sold mo or yung gastos mo ng nabenta, magkano ang cost ng 8,000? So, 8 divided by 10 times 4 million. Kaya ito yung naging formula natin. Is equals to 3,200,000. That is the product cost. Hindi siya magiging period costs. Operating expenses. So, the operating expenses will be 4 million. And next will be ending inventory. So how to get for the ending inventory? Hindi ba class 10,000 lahat ang na-produce? 8,000 lang yung nabenta. Ibig sabihin, meron pang natirang 2,000 units. So, magkano ang cost ng 2,000 units? 2,000 divided by 10,000 times 4 million. That will be 800,000. So, that will be your product costs. So, ito pa yung cost nung natirang 2,000 units. So, when a cost is a period cost, it is automatically charged as an expense. So, take note class, kapag period cost yan, direct agad yan sa expenses. Hence, the 4 million is deducted outright, not as a cost of goods sold, but as an operating expenses. And there is no value on the ending inventory. So, kapag yung 4 million daw class is a product cost, hindi siya mapupunta ng operating expenses. Pansinin nyo dito class, 0. Pero kapag yung 4 million is a period cost, direct siya sa expenses. Naintindihan? So, sample problem number 2. So, let's compute for the profit or loss. Normal capacity equals to actual production. Bella Corporation has the following standard costs and production cost in 2020. So, ito yung mga given. Unit sales price, 200 pesos. Unit variable cost, 120. Unit fixed overhead, 20 pesos. Unit variable expenses, 10. Unit fixed expenses, that will be 5 pesos. Beginning inventory, 4,000 units. Normal capacity, 20,000 units. Itong normal capacity class, ito yung, let's say for example, si Bella Corporation, ito yung normal capacity niya or ito yung normal na nagagawa niya. Naintindihan? During sa isang taon, 20,000 units yung nagagawa niya. That is the normal. Pero how about for this 2020, naging 19,000 lang yung nagawa niya. So, unfavorable yun for the company. Naintindihan? Kasi nga, ito dapat yung gagawin niya, 20,000, pero bakit 19,000 lang? Naintindihan? Pero kapag, let's say for example, naging 21,000. So, kapag naging 21,000 ito, favorable sa company. Why? Ito lang yung normal capacity mo, 20,000 units. Pero bakit naging 21,000? So, ibig sabihin, there is kumbaga, nadagdagan yung production mo. So, it is favorable on the company, on the part of the company. So, the fixed expenses are also based on normal capacity. So, required, determine the operating income under absorption costing and variable costing under each of the following cases. So, take note class, ang hanapin natin dito is the operating income under each of the following. Case A, B, C. Ito yung production, 20,000. Ito yung sales, 22,000 in case letter A, 19,000 in case letter B, and 20,000 in case letter C. Pansinin nyo class, in case letter A, mas mataas yung sales kaysa sa production. In case letter B, mas mababa yung sales versus production. In case letter C, pareho sila. So, first, this will be the formula. Sales. How to get for the sales? So, madali lang. Napag-aralan na natin ito on your CVP analysis. Magkano yung nabenta mo, quantity sold, magkano yung presyo. Naintindihan? Variable cost of goods sold. Magkano yung nabenta mo, magkano naman yung costs or the unit variable costs. Next, variable cost of goods manufactured, that will be quantity produced. Sa manufactured class, ito yung magkano yung nagawa mo or magkano yung na-produce is equals multiplied by unit variable costs. Variable expenses, that will be quantity sold times unit variable expenses. Unit fixed overhead is equals to budgeted fixed overhead divided by normal capacity. And unit fixed expenses, budgeted fixed expenses